Hello and welcome to another video. Today we'll be looking at how you can trade XAUUSD with ultra evasive Grail Hedge strategy. Okay, on my screen I have gold chart 5 minutes time frame, and I currently have a trade. I have some trades running. I have two trades running. I have a buy trade and I have a sell trade. The lot size, for the two trades is 0.01. Okay. Now for the ultra evasive graded strategy part of this video. Okay, I expect one of the two running trades to get triggered with the TP. I expect one of the two trades to close out in TP. Okay. Excuse me. Okay, this my buy, this my sell. Okay, the take profit, okay, is 30 pips. So if the buy trade closes in 30 pips, I have the sell trade running. Okay, now the sell trade will react with the buy stop. Okay, but if the sell trade closes in TP, okay, I'll have my buy trade running. Now the buy trade, this buy trade that is running will react to the sell stop. Okay, so the sell stop will act as the edge for the running buy trade. So at the psychological level, okay, you place two trades at the same time. I'm talking about the buy and sell trade almost at the same time. Okay, if we look at the mark, the mark is at 1998.358 for my buy trade, and then 1998.157 for my sell trade. So they are the two trades, the two running trades are on the 1998 price level. So I expect one of the trades to get triggered to close out. I expect either my buy trade closes in profit, or my sell trade closes in profit. I expect one of the trades to close in profit, either the buy trade or the sell trade. One is expected to close in profit as time goes on. Okay, for the edge trade, this is the edge trade, like an insurance for the sell trade. Buy stop will act as an insurance for the sell trade, and the sell stop will act as an insurance for the buy trade. So the spacing is at about 49 pips. Okay, the edge spacing is about 49 pips. Okay, for my buy trade, I have the price level to be 1998 price level. If you add 49 pips to that, it will give you if you subtract 49 pips to the price level, it will give you 1993.46. That's for my buy trade. That's the edge spacing. Now for the sell trade, 1998, if you add 49 pips to the edge as the edge spacing for the buy stop for my sell trade, that will give you 2003.06. Okay, so don't forget the take profit is 30 pips. The edge spacing is uh 49 pips. Okay, edge spacing is 49 pips. Right now it appears as if the sell trade will get triggered first. Another thing is the lot size. Okay, the lot size for the initial trade is 0.001. Okay, while the lot size for the pending orders for the edge trade is 0.03. Okay, 0.03 lot size for the edge trade. So as I was saying, the take profit, okay, is 30 pips. Take profit is 30 pips. Okay, and then the edge spacing is 49 pips. The edge spacing is 49 pips, while the stop loss is 87 pips. The stop loss is 87 pips. So the trade is running. Expect the TP for the sell trade to close first, as it is. Expect the TP for the sell trade to close first. Like I said, you start with the buy and the sell at the same time on one point at the preferably at the psychological level. The psychological level is at the 2 mark. The first one is the one above is 2002. The one below is 1992. So the next one should be 1982. The lower one should be 1972. So like every 100 pips on the 2 mark. Okay, that's your psychological level. So you should place your ultra evasive first entries, which is the buy and sell, at the psychological marks. It's preferably you place it at the psychological mark. Okay, but for the purpose of this explanation, I decided to place the 2 trades, the first trades, at the 1998 price level for the purpose of this video. Okay, so that we can conveniently trade XAUUSD using the ultra evasive Grail Hedge strategy. Okay, don't forget the take profit for either of the first two trades, that's the buy and the sell running trades, is 30 pips. So whichever closes out with the TP will be our profit. Then we'll start to manage the unclosed or unclosed running order. We start to manage it with the Grail Edge strategy. So as it appears, as we can see on the screen, it appears the sell trade will close first in TP. Then we'll have the buy trade running with drawdown. So we have a sell stop below 0.03 to respond to the running buy trade as our first edge trade. Of course, starting with 0.01 as your running trade, your first edge trade will be 3 times the lot size of your starting trade. That's 0.03. The second edge trade will be 0.08, while the third and the final edge trade will be 0.24. Okay, so it's usually 0.01, the next followed by 0.03, the next is 0.08, then the final one is 0.24. So at the point of 0.08 and 0.24, that's the second and the third or final edge, you should have known the direction price will go to. So at that point, it's left for you to decide how you're going to place the last edge trade, which is 0.24, which is a higher lot size, or are you going to allow price to go in the direction and then you close all your trades, your running trades at break even. Okay, this is the initial trades using ultra evasive before this exercise. That's the initial trade results before this current exercise. Now for this current exercise, I just closed the sell trade. What I just did is to close the sell trade, as I have seen that price is heading, it's trying to go up. So I just closed the sell trade. See the price is going up. So close the sell trade. I'm now adjusting the take profit and the stop loss. Okay, so I've closed the sell trade in profit. So what I just initiated a robot, an expert advisor. Okay, what I just did now is to initiate an expert advisor to manage that trade. So that's this the 1.09 profit is my most recent close trade. So the profit has increased for the day by 1.09. So what I'm going to do is to manage the running trade, okay, which is a buy trade with Grail Hedge strategy. So to do that, I've initiated my expert advisor, my robot, and it has already placed a sell stop of 0.03. Okay, and it has managed my TP for 30 pips for both the buy and the sell stop. It has calculated the edge spacing 49 pips. That's where my sell stop is placed. That's 1993.458. And it has calculated its 7 pips for both the running buy trade and the pending order sell stop. So I have 87 pips as my stop loss for the two trades. One is running, the other is pending. Okay, so don't forget the Grail Hedge strategy pop-out started since I closed, in as much as I've closed the running sell trade knowing fully well that I have a pin bar that indicates that price may go up. So that's why I closed the sell order in profit, expecting price to go up as I've anticipated. So in order to start calculating the 30 pips, edge spacing, 49 pips, stop loss, 87 pips for both orders, I've initiated my robot, okay, to quickly do that on my virtual private server, VPS. So my robot has done that, has calculated all the take profit, stop loss, edge spacing, and has placed my sell stop. So I do not need to manually do this. Expert advisor is available. If you want it, you can contact me for your copy at a particular fee. It's gonna cost some amount, okay, so that you can also get to use this to trade XAUUSD or Euro USD or GBP USD or whatever forex pair you want to trade it with. Of course, you will need a virtual private server, a VPS, for the robot to work. Okay, it will cost some amount. You can contact me through the link below the video for your copy of the robots. The robots will manage your running trade using Grail Hedge strategy settings that I'm going to provide. So I still have my buy trade running. My buy trade is running. I have a pending order. The first edge trade pending order, sell stop 0.03. Ready to respond to this buy trade. Initially, I had two trades, a sell and a buy trade, in line with ultra evasive Grail Hedge strategy. But on the 5-minute chart, I saw a closure of the last candle with a pin bar indicating that price will go up. So I had to close the sell trade. And then, as you can see, my drawdown is being reduced, indicating that price is going up on the charts. Don't forget, the TP is usually 30 pips. The stop loss is usually 87 pips. The edge spacing for your pending orders is 49 pips. Okay, so the settings, the amount of pips differs from one pair to another. The pips, the profit, take profit, stop loss differs. That of XAUUSD differs from that of Euro USD. That of forex differs from that of volatility index. Okay, but for XAUUSD, the TP is usually 30 pips. Okay, the edge spacing for your insurance, your Grail Hedge strategy insurance, the first edge or the second edge or the third edge spacing is usually 49 pips, while the stop loss is 87 pips. As you can see, price is going up. If you look at the support, so the pin bar, the 5-minute chart pin bar, the candle pin bar indicating price will go up. I anticipated that price will go up, so I quickly closed the sell trade, and then I initiated my robot to calculate and place the pending order, calculate and position the take profit, stop loss for all the orders, all the trades on my screen. Okay, so price is attempting to go up as I've anticipated. Okay, so for this strategy, the minimum balance using 0.01 lot size, starting lot size, the minimum balance should be around $250 to $300. Okay, so that you have enough room for you to use the lot size for the first hedge trade, which is 0.03, the second edge trade, which is 0.08, and the third and final edge trade, which is 0.24. So for you to have enough room in case you are trapped in a range, you need minimum of $250 or $300 to start with 0.01. Okay, but if you have $600, that's double the required amount. You can start with 0.02. Of course, the first edge trade will be 0.06. Okay, second edge trade will be 0.16. Okay, and the third edge trade will be 0.42 or thereabout. So if your balance is 900, your starting balance is $900, you can start with 0.03. So that's the way you increase your balance on your lot size. That's the way you calculate your lot size, the starting lot size for your balance. If your account balance is $1,500, you can start with 0.05. So that's basically how to calculate the trading amount required for the Grail Hedge strategy. Okay, the Grail Hedge strategy is a good strategy. It helps you to manage your trade if it is losing or if it is in profit. More like provide insurance for your trade. Okay, you can use Grail Hedge strategy to trade forex, to trade gold, to trade volatility index. Okay, you can use Grail Hedge strategy to trade non spikeable instrument or assets. But you can't use it to trade boom and crash because of the spikes. You can't use it to trade range index. Okay. You can use it to trade gold just like what I'm doing, but I'm trading gold during the non-volatile period. In the period of news release where we have like for example non-farm payroll, during this kind of period, you don't use Grail Hedge strategy because of the spike. Spike after news is released can affect the slippage. Okay, and this can distort the strategy, the edge pattern of the strategy. So you use this strategy when there is no news. Okay. Usually when there's no news, make sure there's no news, no high impact news around the corner when you are using this strategy. And in case you are using the trial strategy and it's about to be a news release that's of high impact, like US CPI, non-farm payroll, retail sales, all these high impact US related news, the best is to close all your trades. If you are going to be in a small loss, better than carrying big loss due to spike. Okay, so make sure you use this strategy when there is no news, and conveniently you make your profits, and your account will grow as time goes on. Also, your broker matters. There are some brokers that does not allow a hedge. Okay, if your broker is not allowing hedge, you don't have to use the strategy. The broker should be, I use Xness as my broker. So your broker should allow hedging. If your broker allows hedging, you can use the strategy to make some profit using Grail Hedge strategy. Of course, Grail Hedge strategy involves you managing your running trade, but ultra evasive Grail Hedge strategy is you starting with two trades, buy and sell at the same time, and then closing one of the two trades in profit before you now apply Grail Hedge strategy to manage the untriggered or the unclosed trade or the trading drawdown for you to start to manage it with the Grail Hedge strategy. So ultra evasive Grail Hedge strategy is an advanced form of Grail Hedge strategy in the sense that you will have taken your profit first from the trade before managing the running trade that did not close in profit. And don't forget, the take profit is usually 30 pips for gold. Okay, so if my entry order, okay, is at 1997, of course, or 1996, of course, adding 30 pips to that will be 1999. So that will be my take profit. Okay, and that's 30 pips, and the edge spacing is 49 pips. Subtracting 49 pips from the price level of the running trade, you get your edge spacing. If it's a running buy trade that's in loss in drawdown because you have closed the sell trade in profit, then you have your edge trade 49 pips below that running buy trade that is in loss. Okay, and at that 49 pips you are going to place a sell stop order. But if it is a sell trade that's in loss, you have closed the buy trade in profit, but you now have a running sell trade in loss. Of course, the edge space will be 49 pips above that sell trade, okay, for you to have your buy stop. Okay, so at the pin bar, below the pin bar, I can see an ascending trend line indicating that price will most likely go up. Okay, price will most likely go up because of the ascending trend line. So price is still ranging. Price is ranging, but ranging upwards. And the range is respecting the ascending trend line that I've just drawn on the screen. Okay, so I expect price to go up and trigger my take profit above. Of course, if that happens, I will have to delete the pending order. That means I'm able to close in profit twice. That's for the sell trade, and then for this present running buy trade. Let's see how it goes, if that's going to be possible. If it's going to be possible for me to close in profit for this current price, for this current running trade. For now, price is attempting to go up, respecting the ascending trend line. We are currently looking at the 5 minutes time frame. Okay, We are on the 5 minutes time frame, and price is trying to go up. But if price crosses down and goes down, it's going to trigger my sell stop. The lot size for my sell stop is 0.03. That's 3 times the lot size of this current running buy trade. Okay, it's in profit, and the pending order, the edge trade, my first edge trade, is not triggered. The ascending trend line is respected, and price is attempting to get to the 2002 resistance, psychological resistance level. So as price goes up and tries to trigger my take profit, that's 30 pips. Okay, as price tries to trigger my take profit, 30 pips, my pending order is still there. So more like there's no need for Grail Hedge strategy for this trade session. So there are instances where you win both ways. Like I've closed the sell trade in profit, and my buy trade is also running in profit. So at the end of the day, the edge trade is not triggered. The trade session is not extended. It's a shorter one for me, in as much as my edge trade is not triggered. But as it is right now, if price drops and triggers my sell stop, if price drops and triggers my sell stop, that's at 1993.458, then that means Grail Hedge strategy has begun and management of the trades will continue. Of course, I have my robots managing the placement of the trades. If you need the robots, come to my inbox on Telegram at a fee. You get the robots, put it on VPS, you follow the rules, and the robots will do the job for you. So that you need to place the first trade or the first set of trades. If you are using normal Grail Hedge or if you are using ultra evasive, you have to do the first part. Then the robot will continue the rest and take care of the rest for you. So I expect price to go up and trigger my take profit above. Expect price to go up and trigger my take profit. So let's see how it goes. So using the ultra evasive Grail Hedge strategy, this current example of how to do it shows that you can win both ways. You can end up closing the sell trade in profit and still close the buy trade in profit. That's the beauty of ultra evasive Grail Hedge strategy. But you are sure of closing one leg in profit and then managing the other leg with the edge trades so that you can break even. Or if you're lucky, just like I am right now, you can close in profit without even you having to trigger the edge trade. But if you trigger the edge trades, you can end up setting the second edge trade, which will be like the first edge trade for this example is a sell stop of 0.03. So the second edge trade will be a buy stop, and the third edge trade will be a sell stop. Because the buy stop, the lot size will be more, which is 0.08, and the final edge trade will be 0.24. So the reason for the increment in the lot size for all the trades to close at break even. You can see price is trying to achieve the 30 pips. Price is trying to get to the 30 pips level, which is 2001.358. Okay, I have an inside bar, and we have it trying to break out upwards. Looking at the 5 minutes time frame. So it's a question of time. You have to wait patiently and monitor your trades. If you are using manual calculation, and you are imputing it manually, you monitor. And if the robot is also managing it for you, you also monitor, because robots can end up doing more than 3 edge trades. So at the point of completing the third edge trade, you have to disable the robot so that it stops at edge trade 3. The original trade, that's the first trade. The first edge trade, that's the second trade. The second edge trade, that's the third trade. And the third edge trade, that's your fourth trade. So you should stop at the third edge trade, which is your fourth trade. So you have to disable the robot. In case you are able to get the robot, you disable it, and then you start to monitor your trades so that you end up closing in profit. Don't forget the psychological level at the 2 mark, which is 2002. The next level above it is 2012. Okay, but below it is 1000. Okay, price about to trigger my take profit. Next level is below is 1992. The next psychological level below it is 1982. So every 100 pips at the 2 mark as a psychological level, as the ideal place for you to place your buy stop, sell stop for your initial ultra evasive Grail Hedge entry placement. Okay, now my second trade has closed in profit. I'll delete the pending order, but the robot has just done that for me. So that's it. Account balance has increased. All right, so that's just the way it works. That's the way it works. Got the trades using ultra evasive Grail Hedge strategy. Using ultra evasive Grail Hedge strategy. You can use this strategy for forex pairs like gold, like XAUUSD, like Euro USD, like GBP USD. That's the mark. That's the consolidating mark where you have more resistance being broken. That's a likely place for you to start your ultra evasive Grail Hedge strategy if you don't want to start it at the psychological levels, where you have more arrows, more fractal arrows pointing at the same point, at the same line. That's the most likely place for you to start placing the first buy and sell trades for your ultra evasive Grail Hedge strategy. But if you are not doing that, you can wait till price gets to the psychological level, which is the 2 mark psychological level. Okay, for you to place your buy and sell trades. Now you are looking at the settings for the indicators on the screen. Okay, you have fractals, you have 5 EMA, you have 20 EMA. Color is purple. For the 20 EMA, the color is purple. For the 30 period Bollinger Bands, deviation is 0.029. Color is pink. Medium, apply to medium price IHL/2. Okay, for indicator window 1, you have RSI, you have moving average, Bollinger Bands, another moving average, then one more moving average. These are the parameters for the indicators on the screen, but the indicators on the screen will only guide you to know the direction price may go, but you don't really need it for the Grail Hedge strategy. For the RSI, the period is 8, apply to close, no color. Okay, no color. And for the levels, you have 72, 20, 80, and 28. Okay, that's for the RSI. Then next is a moving average. Period is 3, shift 0. Method simple, apply to previous indicators data, and the color is green. Another moving average. Period is 8, shift is 0. Method is simple, previous indicators data, color is red. Another okay, these are Bollinger Bands. Period is 34, deviation 1.619, color is black. This is a moving average. Period is 33, method is simple, apply to first indicators data, color is purple. This is a 6 period moving average. First indicators data, color is black, method is simple. So that's that for the indicators. In case you want to use the indicators, that's that for the indicators. That's that for the indicators. Okay, so buy when the black line and the purple line cross above the pink Bollinger Bands. That's your buy signal. That's your buy signal. Okay, and same thing happens on the indicator window 1. When the green and the black lines crosses above the mid band and also touches the upper band, that's a buy signal. The green, black, and red line, the most crossed above the mid band, the middle of the Bollinger Band. Then the green or possibly the black must touch or cross above the upper band for you to buy. Then vice versa for when to sell. The black on the main screen, on the main window, the black and the purple moving average must cross down the pink below the pink Bollinger Bands. And on indicator window 1, the green, black, and pink line or red lines must cross down below the mid band, with the green and black touching the lower band for you to sell. Okay, you can see price retracing from the 2002 psychological level. So that's that for the strategy. Make sure you click subscribe button to subscribe for the channel. Subscribe to the channel, click like for the video, click the like button for the video, click the bell button below the video for notification, so that when we release another video, you'll be the first to see the video prompt. You can also drop comments, ask questions below the video about the Grail Hedge strategy. We'll try as much as possible to explain or respond to your question. We also have our website, www.binfxtrader.com. Go to the website to learn more on how to trade forex and volatility index. You can also visit another website of ours, fxfables.com, to learn more on how to trade forex and volatility index. Till I come your way next time with another strategy, is bye for now.